Hello and welcome to my channel. My name is Bonafide Plug, and today I'll be introducing you guys very briefly to crypto and also show you guys how to purchase cryptos, the $1,000,000 question. Very quickly though, nothing in this video or in my channel will ever be financial advice. All of this is entertainment. If you invest in crypto, you can maybe expect to lose some money, and so beware of that. And also, I will never ask you guys for any money. I know this is my first video, but I'm speculating that people will use me as an opportunity to funnel in some money by scamming you guys. So don't fall for it. I'll never ask you guys for any money. Um, so real quickly, here what I have right here is actually the white paper for Bitcoin, the elephant in the room. And the reason why I call it the elephant in the room, it's because Bitcoin is actually the first crypto to have been introduced to us, right? And despite the fact that it's the very first, you would think that people would have overthrown Bitcoin by now, right? When we start off with, especially in regards to technology, when something gets created, usually other things follow suit, just like it's been done in the crypto market, but usually something kind of clicks and goes and overthrown the very first one. But interestingly, with cryptos, Bitcoin is still number one. Now, I'm not saying that the technology of Bitcoin hasn't been is the best, and none of the cryptos below have done a better job. I'm not saying that. In fact, all I'm saying is that it's still number one, despite anything that we can mention. So shout out to Bitcoin for that. It's creating millionaires. It's creating a ripple for other cryptos to follow suit. And in fact, I do want to let you guys know I don't even own any Bitcoins. But I'm really just giving Bitcoin its flower for this first video because it's the foundation for every other crypto. In fact, the reason why I have this white paper open right here, well, there's a couple of reasons. First of all, it's the first crypto, so I think the fact that we're studying the foundations of all crypto can give us more of an insight and a better kind of understanding of what's coming below Bitcoin right here, right? All these other ones. So the fact that it's the foundation, then it can also give us a foundation of understanding what cryptos are. Another reason is also that this white paper is relatively short compared to a lot of other cryptos I've seen, right? I do want to give a quick shout out to Isaac for telling me to read the Bitcoin white paper, and I'm happy I did. But here I'm kind of going through the CoinMarketCap website where it's a bunch of crypto listings. And if we go on the Ethereum website, I just want to see here if they've got where I can find a white paper right here. I think I could find one. Huh. I don't know if they've got something called the white. Oh yeah, they do. Right here. Ethereum white paper. Now this right here is a lot longer. It's a lot longer if you look at the scroll bar here. Anyways, so Bitcoin. What is Bitcoin? Now, Bitcoin is essentially just a peer-to-peer electronic cash system, as the title says it, right? So what does that mean? Really and truly, what it really means is that there is no third party involved when a payment is done. All that's really involved is the network and the servers within the network. And if you ever read this white paper, because I won't read it all, but you'll notice that they call miners or the servers nodes. But I like using the word server because I find that it's more universal for people, right? We hear the word server in a lot of aspects of technology, whether it's the gaming world or the, the website hosting. So server is just such a better word for beginners, I believe, than nodes. It can sort of be sort of confusing for people, I guess. But anyways, so peer-to-peer electronic cash system which allows money to be sent from one place to another without a third party. So how does this work? Well, you've got these servers and they've got this probabilistic way of um, dealing with the transaction. So what that means is we sort of at random give all these miners or these servers um, uh, uh, an equation, and they have to solve it. And once it's solved, the miner that solved it, and it's usually the usually ones that have the higher computing powers that often solve the most, um, end up receiving a reward, and they also end up receiving, I believe, a fee, the fee that's being paid, or a part of the fee, in fact. And so what that allows, right, is that what is called this concept of technology is called the blockchain technology. The blockchain technology is not exclusive to cryptos only, which is interesting, but it's that's how it was first introduced to us. And what blockchains are essentially, right, in a simple way, blockchains are basically a block, right, that has certain information, and amongst that there is the signature, the digital signature of a um, of a user. There is a hash code pertaining to the transaction that's about to occur, and there's also the hash code of the previous transaction. And the previous transaction allows the linking between all the blocks, hence why it's called a blockchain. So every block is linked to each other. And what this allows essentially is a secure way of, you know, of protecting the network from hackers, from people who would want to modify anything, because essentially the blockchain is a contains data. It's a data that's shared within and all across the network in a decentralized manner. So that means that not one of the servers have the most information. All the servers have the same amount of information, which means that if you set up a server in the Bitcoin network to mine Bitcoin, you will need to download the records of transaction that's ever occurred in the whole market since in the whole Bitcoin network since 2008. So basically, every server, every nodes, if you want to call them now, every node has the same record, the same ledger. Um, so they have this, they know all the transactions that's ever happened, and they have to have them. Now, here's the problem with Bitcoin for a lot of people, right? So the first problem is the scalability. Now, the more transactions happen, the more there will be required computing power, and this is not very, very environmental friendly. So that's why a lot of other people have come out and have tried to create cryptos. Now, this method or this protocol of that's used within the Bitcoin network is called the proof of work. So the proof of work essentially is um, the whole mining system that I've explained to you guys is what proof of work is. So what it requires, it's a probabilistic way um, of finding out if a payment can go through. And so the miners have to sort of calculate all this, and um, there's this reward and all these other stuff um, that allows a transaction to go through. But recently, or I don't know how recently, in fact, but at least now they have been coming out with a new way of dealing with payment called proof of stake. And this is more of a deterministic way of creating payments. And for a lot of people, again, there's pros and cons in both, but essentially the pros of the proof of stake is that it's much more scalable, right? Um, you don't really have to worry about um, all this computing power of calculating stuff and such. So it's quite interesting. Now, um, the other interesting thing about Bitcoin is that it seems that a lot of people in the world want to decentralize the economy, and it it, it can be seen just by looking at the market cap and then comparing it to the market cap of Apple, which is the highest market cap in the world. Um, so Apple is the highest market cap in the world. It's almost there. I mean, 2.3. It was 2.5 recently. So, Microsoft. And again, it's kind of unfair to to compare the crypto market, like a whole market, to like a company, but just to show you guys that like a lot of people want to decentralize the world. So it's super interesting. Now, how do one buy crypto? So very good question. I have a couple of websites I can show you guys to buy cryptos. To me, these are like my favorite. Um, so we've got Binance, KuCoin, Crypto.com, and Coinbase.com, I believe, or Coinbase.ca. I'm Canadian, by the way. So here, you've got Binance, very easy to use. You essentially just have to download the app, make an account. You have to get authorized by the KYC, the Know Your Customer system. Um, and essentially, what happens here is if you are accepted by the network or the service, I guess, sorry, you are allowed to make payments. Same with Coinbase, same with Crypto.com. I know KuCoin doesn't essentially ask for KYC, and the reason being is that it's not as big as these top dogs, but it's still as important. A lot of the cryptos that I'll be sharing with you guys will be able to be found either on KuCoin or on PancakeSwap. Um, Now here's this website right here usually has like all the very low market cap cryptos, and if we go back just real quickly to CoinMarketCap, if you're looking to make small return of investment, but ones that are still considerably bigger than um, the stock market, I highly recommend going for the top 50. Now, the lower you are going to go in regards to the market cap ranking, the riskier your uh your investment is. Um, so a lot of time, you know, you can do really well just being in the top 50. If you're in the top 50 or at least the top 100, you can make quite a lot of cash safely. Um, and the return of investment is usually lower than what's in the second page, which is the top 200, right? So, um, but if you're looking to go all out, because I'll also be sharing some of the low market cap ones, which are like at 500 or stuff like that. You can usually find those in smaller websites like PancakeSwap or KuCoin. So this is always a perfect way to navigate in my well perfect. It's just a good way of navigating your investments. The way I do it usually, right? Is I'll have 50% of my crypto holding in the top 100. Use Yeah, in the top 100. So 50% of my crypto holding is in the top 100. 30% of my holding is in the top 300. And then 20% of my holding is in the top 1,000. Now, I personally believe that this 50% will always be able to compensate for any losses incurred in these high risk ones. So I call this the low risk investment. I call this the mid risk investment. And this one is the high risk investment. So obviously, you want to kind of be smart with this. The percentage really depends on your own situation. I'm fairly young. I'm not too worried of losing money in the crypto world. There's so many opportunities and so many ways of making money that I'm not too worried. And the reason why I've got this 20% at the top 1,000, right, is that this right here could easily overthrow the 50%. If at least 2 or 3 of my holdings go times 10, which it's much more, there's more potential of it going times 5 or times 10 here. The chances are more likely, but the chances of it going low as is also more likely. So take that into account. I think I'll just cut this video short. This is my first video, so do give me some slack, but I'll get better. I haven't really made any sort of structure to my videos, but yeah. I do want to give a quick shout out before I end this video to Reborn, Zen Lounge, Crypto Mason, Bearable Bull, Coach JV, KenMac, and the people on my Instagram. All of you guys have essentially inspired me to make this account, and I hope to see you guys soon. Please like, leave a comment, subscribe, give us some constructive criticism. I appreciate it a lot, and see you guys next time.